Welcome to Key Stock and Crypto Channel.
And we have stocks taking a beating yesterday after getting a little relief yesterday as they were pushing down yields. We have a lot of volatility in the market. Every day we're pumping and dumping. Now we have pension fund panic led to Bank of England emergency intervention. And we see bond markets are going crazy. Now we have Ken Griffin, of course, the head of hedge fund Citadel, says that the Fed has not done enough. Says the Fed needs to continue to reset inflation. But guys, we see the strong dollar is hurting the emerging markets, and that's what's going to cause them for leaving the U.S. dollar for good. But we have some CFO says inflation has not peaked yet. But guys, we know the data shows us that inflation definitely has peaked. And we see in a lot of sectors, we're seeing deflation. Now, we know places like the grocery store, those prices are going to eventually come down because people are going to stop buying. And we know how it goes. When people stop buying, then things go back on sale. Now, getting over into a little important crypto news. We have China is testing their CBDC, and it was led by the BIS. So we see the Belt and Road coming together. Now we had Biogen pump yesterday off of the Alzheimer's disease. They have medicine that may slow it down, and then we also know Eli Lilly. So we know how big that will be if the testing is correct. Now, guys, we know we're going to be going through an energy crisis, and I definitely see it for at least 2 to 3 years. Now, we have Warren Buffett of Berkshire Hathaway buy $6 million worth of Occidental shares, and he keeps buying. I think he can purchase up to 50%. Now, we have the Nord Stream energy crisis going on, guys. We keep hearing about explosions and leaks. And we know Europe is trying to wean themselves off the reliance of Russia. But guys, that takes a long time. And it's already getting cold. So it is definitely something we want to keep our eye on. But I'm not your financial advisor, not financial advice. Please do your own research. When it comes to natural gas, it's definitely a long-term investment because it's going to be a big player in the fourth industrial revolution. And speaking of the fourth industrial revolution, the country that's going to be leading us is China, the emerging markets, the Belt and Road. And now China is going to be opening back up. And guys, we know Wisdom Tree has the emerging market ETF right along with Vanguard. It is definitely a great play. And guys, you're talking about billions of people coming out of poverty. You're talking about the whole emerging markets that have had their foot on their neck for so many years. And now the fourth industrial revolution gets to open all of that liquidity up. So just imagine, it's only about 350 million people in America. Imagine if they had the same economy as America had for all these years. Imagine what it looks like. And that's exactly what the Belt and Road is going to be. Now remember, guys, I told you about Apple. Apple was going to take a hit, and we're definitely seeing that now. And we know the market cap is ridiculous, over $2 trillion. But guys, we have Apple to accept tap to pay without any hardware equipment. So basically, if you're walking into a retail store, you can tap your phone, and the retailer doesn't need any extra hardware. And guys, we see how technology is making things simpler and simpler. And we know they're not going to bring cryptocurrencies to the masses until it's just one click or one tap. They want it to be seamless. They do not want the people thinking. Now, getting over into the actual indicators, guys, we have yield rates are slowly rising after dipping strong yesterday, which helped the stock market yesterday. And we see the stock market is taking a hit today as yields are rising. We do have the dollar dropping a bit, and we have the VIX rising. And we know the VIX is going to let us know when volatility is right around the corner. But guys, that's all I have for you. Have a wonderful day.
There was a time you went to college campuses and you talked about an equity and debt. I think in this case it wasn't necessarily Fed-induced, but it was entitlement-induced. Yeah. And it could come, this was 10 years ago, And I think you said sometime between, Nostradamus.
2020
You said 2020 and
2035.
2035.
Yeah.
So it's 2000. Is it 2022? Is it happening?
We are in deep trouble. So everything I said at those colleges is worse in terms of the metrics, except for one thing. And what I miscalculated was I didn't calculate zero rates, I used 4% rates. But the only thing Donald Trump and Hillary Clinton agreed on in 2016 was don't cut Social Security, don't cut entitlements. So nothing was done. Joe Biden has excoriated Rick Scott because he dared mention maybe we shouldn't be increasing senior pays. But if you look at the reversal I just talked about, and you use the CBO estimate, which is rates at 3.8%, which I think, frankly, is pretty optimistic, given all the things we've talked about. By 2027, the interest expense alone on the debt eats all healthcare spending. By 2047, it eats all discretionary spending. So we're now getting into fiscal dominance. By the way, by 49, it eats all Social Security. We're getting to the point now where the interest expense on the debt is so high that it's going to eat up our ability to basically service the next generation. I'm not even sure about the current one.
Okay.
I brought some cyanide if you'd like one.
No. I'm thinking about that, and I'm thinking maybe we'll be okay. but
Yeah, because we'll be dead.
Yeah, that's what I mean.
Speculating that extensive use of sanctions against Russia, perhaps against China, if there's any other activities going on geopolitically, could be the last hurrah for sanctions, because I think it could drive and accelerate work by China and Russia to develop CBDCs, to use it in their foreign relations, in the case of China, in the case of their Belt and Road Initiative, and to really move portions of the globe off the dollar-based, Western bank-dominated, account-based system that we have today. And so CBDC is absolutely an effort by many non-aligned countries to move away from the sanctioned power that exists in our current Western bank-dominated, SWIFT-based messaging system, account-based banking system. So there's no question. It's a point that Daniel Gorfine and I made 2.5 years ago in our Wall Street op-ed, saying if the U.S. could send a man to the moon, we could put the dollar into cyberspace, advocating for the U.S. to accelerate its development, its exploration of central bank digital currency. For China, it's not just about developing its own ECNY. It's also about dominating the underlying CBDC technology in the same way they've done with 5G technology, so they can be a major exporter of CBDC infrastructure to countries around the world that desire to have their own central bank digital currency, but don't have the wherewithal to build the core technology from scratch. And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Uber, Bitcoin, self-driving cars. Combine those three together, and you have the self-owning taxi. A car that is a corporation that owns itself, pays for the car lease, the car insurance, and the gasoline from the revenues it makes, giving passengers a ride, and there's not a single human involved in that matter.